last week was all about the Federal Reserve and their comments, as has been the case for quite a few weeks this year, but particularly last week. So we had some kind of conflicting statements between Fed officials. Clearly, not all on the same page in terms of the direction and speed of these rate cuts that we're expecting this year. So we're going to get into all of that. But that really was kind of the spoiler to the market rally last week. So let's talk a little bit more about that. So I'm Mike Minter. This is your Market in Minutes report. And of course, we're looking back on last week, April 1st through the 5th. And kind of a big day today. We've got our solar eclipse scheduled to pass through at some point today. I'm not exactly sure of the time frame, but if you're into that, hope you enjoy. Be careful with your eyes. Although I'm not sure that the cloud cover today is going to cooperate very well with the solar eclipse. But anyway, if you enjoy that kind of thing, hope you do. So let's look at last week. So 5-day performance. Again, it was a bad week, and this was primarily based on the Fed comments. So everything was down across the board pretty severely. Small caps and the Dow got hit particularly hard. But still on the year, very, very strong, of course. Wasn't enough to derail a otherwise pretty solid start to the year, to the first quarter. Let's take a look at rates real quick. We did see a slight tick up last week, kind of on the heels of these comments by Fed officials, but rates did tick up a little bit. Your 30 years at 4.5%. 10-year at 4.41, the 2-year at 4.76, and the 30-year at 7.42. So let's get into the story behind this also. Fed officials weigh in. So the stock market struggled out of the gate, obviously. So Monday and Tuesday were in the red on concerns that recent economic data could derail the Fed's plan for short-term rates. The markets recovered Wednesday through Thursday morning when weekly jobless claims were better than expected, but stocks fell broadly Thursday following mixed comments from multiple Fed officials. So this is what we'll talk a little bit more about. All three averages ended the day down more than 1% for the first time in a month. So not a good day and not a good week. On Friday, though, strong jobs report gave investors much needed confidence as the U.S. economy created 303,000 jobs in March, way higher than economists' expectations, while unemployment dropped slightly to 3.8%. So the markets rallied after the news, but not enough to recoup all weekly losses. So let's jump into the scoop here. What's the scoop? So basically, we had several Fed officials that made speeches last week, including Powell, Fed Chair Powell. In a Wednesday speech at Stanford, Powell said it was a bumpy path to a soft landing, but Fed officials are continuing to look at the long-term trends. But also last week, Atlanta Fed President Raphael Bostic suggested one cut. San Francisco Fed President Mary Daly noted no guarantees, and Cleveland's President Loretta Mester said rate cuts may come later this year. Minneapolis President Neil Kashkari really rattled the markets by suggesting that no cuts may be on the table, followed by Fed Governor Michelle Bowman, who said on Friday that it's possible rates may have to move higher to control inflation. So talk about all over the place. Not only are we off on number of cuts and timing, but you got one mentioning the possibility of higher rates to control inflation. So the market, understandably, did not like this. So this was a little unexpected. The flurry of comments comes following the end of the Fed's blackout period. So Fed officials are not allowed to make public comments except for very narrow windows during the year. This was not a good week for Fed comments. So there you have it, folks. That was the reason for the decline. Markets really not knowing how to digest that. I suspect we'll have a little bit of rockiness this week as the Fed is going to digest the CPI numbers on Wednesday. So here's our key economic data. So Tuesday we have small business optimism index, but Wednesday is big. This is the big one. This is CPI, FOMC minutes, petroleum status and treasury statement. And Thursday we have jobless claims, The producer price index, another big one that the Fed watches closely, and the Fed balance sheet, the natural gas report, and then Friday import and export prices and consumer sentiment. Companies reporting earnings, kind of stepping it up this week with a few more companies. Albertsons on Tuesday, Delta on Wednesday. Thursday, the Progressive Corporation, Infosys, and Constellation Brands. Friday, JP Morgan, Wells Fargo, BlackRock, Citigroup, and State Street Corporation. So pretty big week for earnings. So that coupled with the economic data, we should have a lot of news. And as always, we'll report back to you next week on what we find throughout this week. Hopefully a little bit better week. Enjoy the eclipse if you are inclined to do so. This is our contact information as usual, and hit that subscribe button down below if you would. We'd love to have you get all of our videos, and we will talk to you next week, folks. Appreciate your time. Thanks.